Taiwanese index, though, remains lower, below the flat line, trading with losses of just around 0.2%.
Gold imports have surged because, if you remember, 2 months ago, duty was cut.
The target stays the resistance zone, which is the 25,475 to 25,530 level.
It has been cut down to zero. That's the windfall tax on crude oil petroleum.
India has now become the highest weight in the MSCI emerging market basket.
And yesterday, nearly 1,500 crore worth shares were marked on the NSE for delivery.
Absolutely quiet start. It's 25,400 on the Nifty.
Ahead of the rate cuts, it would be, a more kind of tailwind for the sector.
Very strong fiscal impulse of about 6% of GDP.
From early June, the Nifty IT index is up 30%. So there is also a profit booking. It's new highs for the Nifty and the sensex, so milestones keep getting hit.
Other fundraise that's happening at Nazara, and this time it's for about 800 crore rupees.
Maharashtra and Gujarat have always had a per capita income well above the national average.
Some pressure that has set in. Nifty is down 120 points from the day's high.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, the countdown is on to the big global event, and that is the outcome of the U.S. Federal Reserve meeting. We're in the last 1 hour of trade. You just saw glimpses and highlights of the day gone by. I'm Surabhi Upadhyay. With me, as always, is Reema Tendulkar. And Reema, we're getting some really pronounced moves in the market at this hour, right? You have banks rejoicing, IT sulking, mid-caps getting a little spooked. So it's all happening now in the last hour.
It's all happening, and the Fed meeting is actually currently underway. The decision is going to be out at 11:30 p.m. India time, but things are looking a bit shaky out here in India. We were actually cruising along just fine till about 12:45. In the morning, we went on to hit new record highs on the Nifty and the Sensex, and suddenly, at about 12:45, there was this big fall in the markets, and since then, we haven't quite recovered. Yes, we're off from the session lows, but we're still deeply down for the Nifty and the Sensex, and the problem is not just IT. The cuts on IT have deepened. Now the Nifty IT index is down 3.5%. In the morning, it was down 2.5%. So absolutely no recovery in IT. All the heavyweights, TCS, Infi, HCL Tech, Wipro, across the board, the large caps is selling off. But the other problem is Reliance Industries is under pressure, and the fall in the markets, and at least the frontline indices, Nifty and the Sensex, coincides with the intraday fall that we had in Reliance Industries somewhere around noon to 1. There you have Reliance Industries. But what's supporting us is banks, and the sector churn is still taking place. Money is moving out of IT and it's going into the banking names, and even the NBFCs like Bajaj Finance, Shriram Finance, or heavyweights like HDFC Bank. So, ahead of the Fed rate decision and finally that first rate cut after 4 years, it's expected to boost, the FII favorites, banks. And that's already, taking place.
Absolutely. I mean, banks are ruling the roost in how. And on IT, the fall is not just restricted to the big stocks, the large caps, or even mid-cap IT. I mean, look at names like Memphasis, or look at something like L&T Tech, quite a few names, some of the newer companies, which are at the cross-section of banking and technology. Something like a Zaggle, for instance, is also down quite a bit. So pretty interesting the way the trends are playing out right now. Actually, before we get started, I thought I'll put some trivia on the table, some inputs on what the correlation is between Fed moves and our very own Nifty. And these are some points I picked out from a report that Capital Mind put together and found them quite interesting. So let's share them with the viewers as well. So the Capital Mind looked at the data over the last 3 decades in terms of the Fed cycle, which is either tightening or easing. Now, the Fed has announced a 50 basis points rate cut actually only 10 times in the last 3 decades. I mean, data going up to 34 years. So a 50 basis points rate cut only 10 times. And the Nifty has given an average or a median, not even an average, the median midpoint return of about 1.5%, the day after these big mega cuts, the 50 basis points rate cuts we're talking about. The most frequent Fed action in the last 3 decades, in the last 34 years, has actually been a 25 basis points increase. That's what the Fed typically has done the most, just a quarter bips hike. If we talk about the cycles, then in the span of 3 decades, 34 years, there have been 6 cycles, alternating cycles, easing and then tightening. And for us, which are the cycles that have been the most beneficial in terms of best Nifty returns? Well, the biggest one is a 310% Nifty move. So Nifty, quadrupling basically. This is between July 1990 to February 1994, but it also coincided with, what is known as one of the biggest scams the market has seen. So you want to, put that caveat there as well. The next big move on the Nifty was actually during the tightening cycle, which was from June 2004 going up to September 2007, because that was the big period, the mother of all bull markets, the one that we knew it back then. And the Fed kept tightening, the market kept moving higher. I remember, I have living memory of that time. And then, of course, it all culminated in the global financial crisis. But this time, we're all set to look at an easing situation all over again. And let's see if it can be as beneficial. Because, Rima, I guess the difference is that global markets have already partied very hard going into this easing cycle. So let's see what happens from here.
I know the starting point is very different in terms of the valuations globally and in India. And even that question whether US is going to get into a recession or can it, get away with a soft landing, that also remains to be seen. But, out of the last 12 rate cuts, in 10 of them, Indian markets have given a positive return a year later. So generally, it's positive, but this time could always be different. We don't know. But how should you position yourself in the last hour of trade? Mitesh is now with us for a few closing strategies. Mitesh, the mic is all yours. First, your thoughts on the day, the way IT has come under pressure, banks are providing support, the trends you've observed, and then your top trades.
Good afternoon. I think, that is the most striking feature of the day, that the IT stocks have given breakdowns which could see some kind of severe profit booking. So my understanding is that I think, we should look at possibly exploring some short positions over there. Disclaimer, we have put option positions in a couple of IT names. And the financials, I've been handling for the last 2-3 days that the Bank Nifty will start covering up for its underperformance, and I think that's happening. It's met the target of 52, 850, 900 zones and then slightly retraced from there. But my sense is that, once we start getting past today's high, the Bank Nifty could then possibly look at retesting its all-time high of 53,350. So we'll still maintain a positive bias overall. And looking at shorting, a couple of IT names, that's the idea. In fact, I have a sell on persistent systems. Today's low is 5115, so sell below that. And then keep a stop at about 5180 and look for target of 4960, maybe even lower. So that's the first target which we'll look at. And also a buy on Bandhan Bank with a disclaimer that it's part of my portfolio. Recently I bought it, showing some signs of reversal on the short to medium term charts. So it's a buy with a stop at 210 for a first target of around 221.
So just remember, fundamentally for banks, a cut in interest rate may hurt margins because loans get repriced faster than deposits. So initially, at least, there could be a negative impact on the margins, the net interest margins of banks. But on the way up, if the borrowing cost comes down, it may spur more borrowing. So therefore, lending goes up. And that is a positive. Maybe it improves the asset quality too. Defaults may come down. Not that it's a problem right now for the Indian market, but generally, it's seen as a positive for asset quality. And plus, when flows improve, to emerging markets due to cuts, a decline in the yields in the mother market, US, banks have been much loved by the FIs and they've gone through a period of underperformance. So banks today are up 1.2%. It's a 600-point return at the day's high. But let's focus on some other buzzing stocks. Reliance Power, Reliance Infrastructure are surging in trade as they settle obligations. Vivek is here to tell us more about the backstory and the story.
Well, that's right. So Reliance Power as well as Reliance Infra, both of them in focus today. Reliance Power, remember, this particular company had quite a bit of debt and also had given significant undertakings as a guarantor on behalf of Vidarbha Industries Power Limited. Now all of these obligations have been fully settled. So on the back of that, there is a release as well as discharge of all of the corporate guarantees, undertakings as well as claims. And the total amount of all of these claims have come up to close to 3,872 crore rupees. So now what the company is saying is that the listed entity has zero debt from banks as well as financial institutions. Remember, the company is an operational company with a commission portfolio of close to 5,300 megawatts, close to 5.3 gigawatt. Now coming to Reliance Infra, again, a significant development over here as well. the debt repayment as far as the company is concerned, remember, there has been a one-time settlement that has been agreed between the company as well as Edelweiss Asset Reconstruction Company. So all obligations with respect to the NCDs, which is the non-convertible debentures, of close to 385 crores have now been settled. And on the back of that, you're seeing significant bounce back, both, and also Reliance Infra debt now down significantly, just around 475 crore is where that particular company, listed company debt stands at. So significant development for both Reliance Infra as well as Reliance Power, both the stocks doing very well in the session today.
Okay, absolutely, yeah. Quite a fresh lease of life coming through. Vivek, thank you very much for that. Those are two main names in focus today. Well, let's say hello to Prakash Diwan. He's joining us on the show this afternoon. Prakash, thanks very much for joining in. So let's get your broad thoughts. I mean, interesting reaction, right? Usually the market's absolutely, non-perturbed going into Fed events. It's usually something that plays along expected lines. But this time, I think there's slightly more nervousness. What's your sense? And what's your sense specifically on IT as well, looking at the big cuts that are coming in?
Good afternoon, Surbhi. So, markets never cease to surprise, right? And for a lot of people who have never seen a rate cut cycle begin, this is going to be a first of its kind. So, interestingly, this is something that has been penciled in and anticipated for so long. It was just a matter of timing. Now that we are right on it, it's butterflies in the stomach in terms of how much is it going to be and what's going to be the commentary going forward. Is it going to herald or start off a absolute new trajectory or cycle of rate cuts? Now, that is something which the market is waiting for the simple reason that nobody has a very clear understanding of the post-cut or post-announcement reactions. And that the brunt of it is going to be in IT. I mean, Rima is right next to you. You can check with her that there has been absolutely no indication of any kind of a increase in order booking for most large companies if the rate cut were to happen, because the recession or the lack of it will probably be decided only after a quarter or two. So you will go into this rate cut with very high elevated valuations which had built up for whatever reasons. So I think the market's being very sanguine, Surbhi, if you really ask me. Pairing of positions on sectors that have done well and getting into sectors that have yet not done well is the right thing to do. And my sense is that in India, the domestic financials are poised for a very decent potential re-rating, given that you could have credit growth, you could have interest rate softening, and you'd probably also get into 2 quarters of very good hyper growth kind of levels, which you've not seen in the last two. So, all of that's coinciding with financials and they're underweight. So that's where, it's happening. Money is being pulled out because it's already done well. IT is probably got to pause for some time. I think post-December, Jan is when you could probably look at IT, not till then.
Fair enough. But Prakash, butterflies? Really? I thought butterflies, you'd remember the real butterfly times, right? When Bear Stearns was getting sold for $1 and when Lehman was going bankrupt and when Mr. Ramalinga Raju one day finally said that there's a 7,000 rupee fraud in Satyam. Those were butterflies, right?
Those were gut-wrenching days.
Oh, yeah, actually, yeah. Yeah, that was stomach-churning stuff.
Yeah, absolutely.
No, true. But, let's take that point on IT forward. Rima, everyone's watching the screen wondering suddenly there is, so much profit-taking going on. Prakash is saying maybe it's just sector rotation, some churn and change of positions. But what are you picking up?
I agree. There is no news which justifies a sudden 3.5% fall. It's just that yesterday stocks were at an all-time high, the Nifty IT index. Since the beginning of June, the Nifty IT index has given a 30% return. So there is routine profit booking, which takes place ahead of a big decision. Also, Accenture overnight announced that it's changing its promotion cycle. So earlier the promotion cycle used to be in December, and now they're permanently changing it to June. This, the street is reading, it's currently a challenging environment for Accenture given their focus on consulting, and therefore they have, changed it permanently. It's not a one-time thing, it's a permanent thing, but it's still seen as a sign of challenging times for Accenture. But, coming back to the way Indian IT companies are reacting. So we spoke to Happiest Minds in the morning. That's a small company. Its top line is on an annual basis about $200 million. So that's not really a benchmark to gauge the IT services. But Happiest Minds told us that it's demand as usual. Things are on track. They're maintaining their FY25 guidance. But LTIMindtree, now Citi had a chat with LTIMindtree, so they've come out with a post-management meet kind of a report where they're saying that Q2 is going to be similar to Q1. There is no pickup in discretionary demand still. Most of the order booking is still related to cost takeout. They're saying the green shoots in the environment is not translating into an improvement in the order book. The pipeline is as it was in the past. So that's also important. And even on Q3, right, there is some expectation that H2 is going to be much better because there is pent-up demand. People have repressed spending. So at some point, even though Q3, Q4 is typically not great, maybe this time it will be different like it was post-COVID. But again, over here, the management is not committing. They say we'll see how furloughs play out. We'll get clarity only in Q2. So basically, in a nutshell, what LTIMindtree had to, indicates, right, for the industry is that there is no pickup in demand. So then you marry it to the kind of stock rise. You've got a big event coming up. So there is just some nerves playing out. Butterflies in the stomach.
There's
right?
some butterflies.
In the stomach, right? You make, just book some profits.
Okay.
But, yeah.
Fair enough. Prakash, coming on this, since you're saying, this could be just nothing but tactical position change, would you buy anything? Pure fundamentals, adding to the portfolio. Since IT is now giving the dip, would you buy any stock? IT?
So, absolutely. So just to add to Reema's point, it's a coincidence she spoke about a stock, a company that I track, and that's Happiest Mind. Now, look at what's happening, in the phase where there was a lot of belt tightening for most IT players, especially the smaller ones, given that they are very vulnerable. Most of them have diversified the revenue streams with me. And what's going to happen is come January, and remember there's a big event in the form of the US election, which is going to decide a lot in terms of how the economy is going to expand, how rapidly it's going to expand, if I will. And then January onwards, you'll probably see a lot of workflow start coming to these companies, which are very geared up. My idea is to buy IT companies somewhere around, second half of Jan, when things will be much more clearer. And it could be a very strong run. So 25 could probably see ITs do well as pharma has done well in 24. And it could outperform some of the other larger sectors. So I would definitely buy, but wait for some time and understand. And remember, the good thing is just anecdotally, a lot of annual reports are out now from IT companies. And if you read some of them, the read-through is very clear that they have made themselves much more resilient and future-ready in terms of shocks to the economy. So that's going to help, the growth that can come back. And as Reema said, it could be that post-COVID kind of a phase where there's rapid growth and sudden key expansion also. So we'll wait for that. But yes, it does look promising at certain lower levels.
Do you own Happiest Minds, or is it just a stock that you track, waiting to buy?
No, it's just a stock that I track. Otherwise, I would have definitely added the disclaimer. Yeah.
Okay. It's done phenomenally well, right? As the management was saying, the issue price was 166, and in a span of 4 years, the stock is now at levels of about 800. So it's had a fabulous run over the last 4 years. But BSE, Prakash, Monday, big pop. Today, another big pop. It's just getting more and more expensive. That NSE has that much more to catch up in terms of valuation. What's happening?
So it could be the other way around, because the NSE, listing is getting closer to be a reality. But what's happening is people are penciling in the fact that even from the current, in the last 1 month, I've seen quotes go from 5,100 per piece to almost 6,000 plus now. So it's a rapid 20% change in terms of, what people are willing to pay even before listing. Post-listing, it could probably almost be, another 30, 40, 50% upside. We don't know. It depends on when it gets listed. But BSE is also trying to kind of play catch-up for the simple reason that the business is expanding so much that either of the tools that you own in your portfolio, you will get. It's something like K-Fintech and, CAMS. I mean, both of them almost mirror each other's growth, except for certain nuances from a client perspective. But here, I think it's much more fungible, much more equalized. And as the market matures, you'll have all segments contributing, and which is going to be very favorable for the BSE as well. So I think it's a good bet, but it's too expensive to buy at this stage. Gone are the days when it was available in those sub-1,000 levels for so long. You'll probably have to wait for a bad day in the market or a bad week in the market to buy and make money. But I don't think if you own, you need to be in a hurry to sell.
Okay. Prakash is taking a chance with this one because there's news and our colleague Vivek was talking about it. Reliance Infrastructure, right? Don't remember the last time we discussed this stock. But I guess the market seems to be excited because they seem to have put most of their troubles behind them. I was looking at the shareholding. So Mr. Anil Ambani and family, they still own about 16%. The rest is across a lot of institutions. There's a fair amount of foreign ownership as well. Would you at all even consider, looking at it, because the market loves to play these flips, believing the worst is over, and then we all remember what, let's say Suzlon, right? And the market wants to believe that they're finding another Suzlon every time. So, but tell us if this could go that way, or maybe this could be very different.
I really don't know, because I honestly started looking at it after Vivek brought out all the changes that were happening, because they started seeming slightly more real and decisive in that sense. Because we keep on hearing about a lot of anticipation of change, but this was change that could make a big impact on the company. But I still haven't been able to get my conviction built that this is the time to buy, for the simple reason that there could be still a lot of bullets that could hit you and we don't know about. There's so much of history around these names. Suzlon was a different kettle of fish to be, because if you see the best part about playing such turnarounds is wait for the turnaround to happen. You may lose a little bit of move in the beginning, but you actually ride on the larger part of the turnaround rather than the initial phase, because that's the painful waiting part. So from 9 rupees to 15 was a long time that Suzlon took, but from 15 to 45 was far more rapid. If you draw the graph, you'll see. So I would believe if that turnaround is bound to happen, don't worry if you miss out on the first 10, 15, 20%, but ride the next 80% or whatever more. So it's better to do that, because you could otherwise get trapped in a time correction which could be very long and painful.
Okay, all right. Thank you very much for that, Prakash. A great chat as always. And let's see how this big decision goes, and we'll connect again towards the end of the week. Well, we do have to take a quick break on that note. There's some important news coming in on the flashes as well. The cabinet has cleared the One Nation, One Election proposal. This is, of course, something that the NDA government has been talking about and promising for a while. And it seems that the cabinet has taken another step forward towards it. Well, we have to take that break. And as we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. You can get instant access to breaking news, in-depth articles, analysis, and financial updates at your fingertips. You can download the app from the Apple Store or from Google Play.
Welcome back. Premier Energies continues with its bull run since listing. The stock has suddenly spiked up again in the last 10-15 minutes. Fertilizer names like RCF and NFL too are now back in the green, so some buying has emerged in them. But the big event that all investors all over the world are watching is going to be that FOMC, the Fed rate decision, and the market continues to be split on the size of the rate cut. CNBC's Steve Leisman gets us a detailed rundown on the debate over 25 basis points or 50 basis points rate cut.
Yeah, let's get underneath the debate here. This debate, how much the Fed cuts tomorrow, is linked to views on the economy. And respondents to the CNBC Fed survey see a somewhat weaker outlook, but still one in line with a soft landing. GDP seen at 2% this year, 1.7 in 2025. It's down 0.2, but still around potential growth. Unemployment 4.4 this year, 4.5 in 2025, both up a couple ticks as well. The inflation rate coming down gradually towards the Fed's target by 2025. A note that near term, respondents may be too pessimistic already because today's retail sales suggest a 3% GDP quarter, and the survey average for this quarter is just 2%. They are usually too pessimistic on stocks, however, and you can see it here. Currently, we're at 56.33. They see stocks going down by the end of the year, but coming up by 3% by the end of December 2025 to 58.06. Economist Hugh Johnson, one of the more optimistic members of our survey, he says the configuration of economic and financial market events facing investors for 2025 is quite positive. What does he see? Lower rates and higher earnings ahead, with the main question being valuations. And he thinks those are somewhat elevated, need to come down. 50% of our 27 respondents, however, think the S&P 500 is overpriced for a soft landing, with 47% saying they're correctly or underpriced. This is actually not all that bearish for this particular group, which is often bearish on stocks. How about the economy? Well, they 53% see a soft landing around where that's been. 36% say a recession is on the way. And here are the Fed expectations. Our group differing from the market. 84% say the Fed will cut by 25. That compares with a 65% probability of a 50 in the futures market. 3.7 is the year end, almost a percentage point higher than the market is priced, with 3.3 being the neutral rate. So for the longer term investor, you know, you can be chill about this. 25 or 50 won't matter as much as long as the Fed gets it right over time, bringing rates down in time to avoid a downturn. And 74% of our respondents think this rate cut is in time to save the soft landing.
Okay, I like how Steve puts it, that you can be chill about it. 25, 50, whatever it is, as long as the Fed gets it spot on and ensures there's a soft landing in the US. We caught up with Timothy Moore of Goldman Sachs as well on this big event that is underway. Take a look at his expectations.
From a risk management perspective, we think that 25 makes sense, but you could certainly argue 50. And as I said, time will tell. Get India-specific performance relative to when the Fed started cutting. It's actually much more muted, both on the up and on the downside during non-recession and the recession circumstances I was just mentioning, than it has been for, say, other markets which are more globally cyclical, like Korea, Taiwan, or even some of the ASEAN markets like Indonesia. So empirically and historically, you know, Fed cutting has not been as influential on India as it has been for other markets.
Okay, so that's a global view on what to expect from the Federal Reserve later tonight. Ronak Onkar, Head of Research and Co-Fund Manager Equity at PPFAS Mutual Fund, is with us. Ronak, always a pleasure having you on. So, you know, I was just thinking, listening to our US colleagues as well, and then looking at your portfolios, you, of course, have a big exposure to banks, to IT services, and then, of course, to a lot of the big tech US names themselves. So I don't know, I mean, if you do a sensitivity analysis, whether your portfolio will be a little more sensitive to whatever route the Fed decides to take or not. But you tell us, I mean, how closely are you watching this event? And really just that, I mean, look at the market today. IT is down, banks are surging. Everybody's thinking that the RBI will follow the Fed very soon. But I don't know if that simplistic approach can really play out.
Thank you, Surbi. Nice to be back. I mean, to be very honest, not paying too much attention to one rate cut or rate hike or whatever happens. The reason is some of the companies you mentioned, we have been owning these sectors for more than decades. And when we look at some of these transitions that have happened in the businesses, the underlying businesses are far more interesting, and the changes that they're going through are far more interesting to study, because those drive the longer term valuations of these companies. Of course, these kind of cyclical sensitive events based on macro activity, they do give you opportunity to enter or exit sometimes. But beyond that, I don't think there is too much to read into one specific macro event.
Ronak, hi, Rima here. You know, we were chatting with one market guest in the morning, and he was saying one of the big risks for the market, as he sees the Indian market, is the fact that the monsoon in the last month has not been that great, and therefore the harvesting season has been impacted. So this has implications for food inflation and what the street is anticipating, what the RBI may do in terms of a rate cut, and even the FMCG earnings. Consensus today is pricing in FMCG earnings of about 14% thereabout for this full year, and that may have downside risks. So he's watching out this the last phase of the monsoon, the harvesting season, very closely. Do you think that's a concern you've heard when you speak to companies under your coverage? How would you assess this potential risk?
So I think from a monsoon point of view, I don't know how to give a contextual answer, but some of the companies we speak to in our portfolio companies or even sectoral peers that are there, the biggest challenge is most of them are anticipating a long-term growth for their businesses and industries. However, nobody has a clue as to what the rate of that growth is going to be over a long period of time, and which is natural to be. Nobody knows what the future holds. But the market seems to have gotten the wind where some of these sectors have been bid up to levels where the valuations will look like very unsustainable, or the growth rate that they have to justify those valuations will look unsustainable. So I think that is a major concern today, that irrespective of what complex macro...
Oops, that line is frozen, so we'll try and reconnect with Ronak. In the meanwhile, for the markets, there has been a little bit of an intraday pullback, at least in the large cap space, and a few stocks, which are on the way up, where there's been a bit of a recovery. So, banks continue to do well, banks and NBFC. So the top three gainers are Shriram Finance, Bajaj Finance, and Bajaj Finserv. And Bajaj Finance, remember, Morgan Stanley has put out a target price of 9,000 rupees. Nestle is another stock where you are seeing buying today, and Nestle has moved up close to about 1.7%. So that's seen buying emerge just in the last 10-15 minutes. You've got L&T too inching up nearly 1%. So L&T has been slowly, steadily trying to creep up. SBI Life is also higher in trade. And then private sector banks continue to see gains. So whether it's HDFC, ICICI, or even an Axis Bank, M&M too is now up close to about 0.5%.
Yeah, I'm looking at the mid-cap market, where today is a day of fair amount of correction for a change. That is, we've already discussed mid-cap IT, which is weak. The other names that actually stand out, something like a Blue Dart. Blue Dart had a very good start to the week. The stock was surging in the earlier sessions, and today it's cooling off. Then you have some of these names like Rights, down about 4% as well. So these are some of the ones that stand out. GM Breweries, also a stock that was surging on Monday and Tuesday. It's cooling off as we speak. There is TBZ, which is on the lower side. But for all the stocks that are falling, and though the mid-cap index is telling you that it's a cut of almost 1%, there are enough gainers as well. Look at HEG. So these are the poppers on the way up. HEG is up almost 8% as we speak. There's ICRA, which is having a very good session as well. Don't usually mention the stock. 5.5% up on an ICRA. Torrent Power, because of the power tie-ups that they announced, the contracts they've got going in Maharashtra as well. That stock's up almost 9%, and the snack maker Bikaji is up 6%. So at an individual stock level, there's still a fair amount of stock buying that is going on. But I think we have Ronak back with us. Ronak, so just complete the point, and also the fact that, I noticed the fact sheet this time around. You guys are still holding on to a fair amount of cash. I think the cash level has only increased from 16% to about 17%. So still not finding enough areas of opportunity in the market?
Apologies, Sobi. I think my internet dropped off, so I could not connect with you. But I agree, the cash levels have been going up, most likely because the valuations that we are seeing are very, very out of the range that we would find comfortable to buy. So cash is building up because we are selling some of the existing portfolio companies. New money keeps coming in. It's a residual cash. Whenever we find good opportunities, we'll definitely deploy. Of course, current market does not seem like the kind of place to deploy, but it's okay to wait on the sidelines for a while and then deploy whenever we are comfortable, when the long-term valuations might look reasonable.
Where have you taken the profits, Ronak? You mentioned that cash is going up. because you've also been sort of unloading some positions. So where are you trimming and booking profits?
Some of the names are familiar to all of us who have listening to the interviews over a period of time. Is like the capital market companies that we own, which are IEX, MCX, some of those ideas where we have trimmed a little bit. Even some of the cyclical companies we used to own in the portfolio regarding minerals like NMDC, steel, etc. We have been trimming in the past. Some IT names also we trimmed like OFSS in the past. So most of these are valuation calls. These are interesting businesses and good balance sheets, but valuations look very, very unsustainable to us.
And any new additions to your portfolio, Ronak?
Sadly, not this time. It's been the same portfolio for a while now.
Okay. And going ahead, are there any other stocks or sectors which are precariously poised that you might exit soon? Where valuations, you've not exited soon, but you'll not book profits, but you're in the process, you're thinking about it because valuations are uncomfortable.
So we watch a lot. So we are deployed more. Like we are only at 17.5% cash. The rest of it is deployed. So if valuations become unsustainable in those sectors, then we will have to relook our stance. But at the moment, it looks okay to hold on to these ideas.
Any changes in the positions on some of your major US tech, the big tech exposures? I know we've had this conversation in the past and you've remained steadfast, still liking a lot of those businesses. Any changes and what's the thinking now?
So no changes in the portfolio, but over a period of time, we have realized that some of the companies we own, like Microsoft or Meta, the valuations were looking stretched in those companies because they have grown a little faster than the peers. At the same time, their stock prices have also risen much faster. So those areas where we are a little cautious about, but I think Amazon, Alphabet is something that we like. And unfortunately, we can't invest more money, but whenever we get an opportunity to reinvest the dividends, we have been deploying that money back into these ideas.
Ronak, what are your thoughts on this booming IPO market in India? Would you call it a mania? I was reading some analysis. I think Prithvi Haldia had put it out in one of the pink papers where he said so far this year in FY25, on an average, IPOs have been oversubscribed by 48 times with an average gain on listing being a staggering 35%. Is it all okay, or is it time to be cautious on the main board IPOs? We've spoken about, the SME IPOs, but here I'm talking about the main board ones. Is it a bit of a mania?
I would agree, yes, to some extent, because the valuations of companies overall, even in the IPOs, are expensive. And when everybody is wanting to sell their shares, we should be a little cautious to see what we are buying. I think that is very important to know which companies you like, what values you're going to pay for them, and over a period of time, how much growth that these companies and sectors can give you, especially in IPOs where the companies may not have a long history of operations and maybe in the new age kind of areas where the business model itself is not proven yet. I think I would recommend a lot of caution when you look at IPOs. And if you see even on the main board, stocks have been sold by promoters and even strategic partners and foreign MNC promoters as well. And we are the market who is buying them at those valuations. So we're a little cautious about the overall capital raising at the market as well.
Ronak, finally, leave us with your take on banks, because you have a fair amount of exposure. I'm looking at the fact sheet now. You've got ICICI Bank, you've got Axis, Kotak. So, a lot of the blue chip frontline pedigree names. And there's a fierce debate raging. I mean, there's one side of the debate, people saying that this whole fight for deposits will get worse and the best of the asset quality is behind us and it'll get troublesome from here on. And then there's the other camp, which is saying rate cuts will happen, margins will improve, so on and so forth. So what do you believe and what's the construct, let's say for the next 1 year, on the larger banks?
So we have been owning these larger banks for a while. That is one of the largest sectoral exposures that we have, about 19.5% in the portfolio. And you're correct. So because there is this non-consensus or a troubling outlook for this sector, the valuations have remained very, very attractive for all the private sector banks that we own. And I think from the point of view of credit growth, these companies are very well poised. From the point of view of fee income growth, these companies are very well poised because they have several segments that generate these fee income. As for the deposits, we have to take a look over a longer term trend as to how the deposit ranges change over a period of time. But I think banks are these consumer franchises who have a lot of brand equity, a lot of network effect, and have operations spread out across the country. They've solved the distribution problem. The technology keeps on reducing their cost of operations over a period of time. And the primary function of a bank to lend money, that continues to happen as more citizens and industries want to build assets over a period of time. So the credit part, I don't think that is broken, but the other side we can debate, and that debate is leading to these valuations remaining attractive. But we'll wait and watch and see how this industry grows over a period of time.
Ranak, thank you very much for joining in. We look forward to our next conversation already. Thank you once again. We'll get into a short break on that note. On the other side, we will get Nimesh in and find out what's happening in the dealing room. Stay tuned.
Welcome back. You're with us on Closing Bell, and the market's staging a nice little recovery right now. Actually, the Nifty is trying to come back towards the flat line. Let's straight away go across to Nimesh and get the sense of the nerves around dealing rooms today. Nimesh, the big day is finally here, and very interesting divergent trends playing out in the market, right? What all did you pick up? What's the chatter like?
Well, it's an extremely choppy and volatile day of trade. I guess the export-oriented sectors are under pressure today. So IT is clearly, facing the brunt. The index, IT index is down 3.5%. Not only that, even the pharma names are under pressure today. So it looks like clearly the export-facing companies are under pressure. And on the other side, it looks like there is a bit of sector rotation happening. So banks are doing good. In fact, yesterday there was a feedback that there is selective buying in private bank names, and that trend seems to continue in today's market as well. So the flow seems to be a bit of moving towards the defensive names. and towards the banking stocks. There is a small MOC basket buying in some select mid-cap names in today's market. So maybe some selective stocks might have a bit of an impact, but it's going to be very small and very selective. So not much to read into that. But clearly, from a flow perspective or from a positioning point of view, looks like there is a bit of caution out there. The broader markets have relatively underperformed in the last couple of days, and even the breadth seems to be quite weak as well. So I guess all eyes on the Fed outcome tonight, which can have a big impact on the Indian markets as well. But to go into the big event, there is a bit of caution clearly in the broader market stocks.
No, absolutely. So I guess let's see how this one plays out. In terms of individual names and news flow, buzz, what's the chatter like today?
Well, so the first name on my list is Samudra Motherson. Big move in that name. Post the QIP closure, there has been a bit of interest as well. I guess there is a very strong demand in the QIP issue. And additionally, the street is anticipating a corporate development very soon. Potentially, the company can bag a large order to enter the electronic manufacturing space. That's the buzz as far as Samudra Motherson is concerned. The second name is Hindustan Construction. Been quiet in the last couple of days, been just consolidating in a very narrow range, but looks like the company is likely to raise funds via QIP very soon. I understand the roadshows have started, and potentially the QIP will happen before the second quarter running. So that's something on Hindustan Construction. The third name is Ola Electric. Big move in that name as well. Stock was locked at 10% upper circuit. Yesterday, there were a couple of initiating reports as well. Even today, the volumes are on the higher side. There are very strong buy flows, and some leading domestic mutual fund is quite active buyer, is what I understand, in Ola Electric. And the last is Imami. Within the consumer name, this is quietly underperformed in the last few days. This month, the stock is down 10% from recent highs. And for the third day running, I understand there are very strong sell-offs. So looks like some bit of profit booking is happening from institutional investors in Imami at current levels.
Thank you. Interesting list as always. And now it's time for HCC to tap the capital markets and look at some fundraising. Thank you very much for that. Mitesh is back with us for a few BTST calls. Mitesh.
Yeah. So Nestle, I think, has perked up very well right now. That's BTST with a stop at 25.80 for targets of 26, 30, 35 and maybe more, because the chart pattern does look more bullish to me. And SCBT on LTTS, it's broken down given a pullback, but the structure remains weak, and disclaimer that I have some put options positions over here, so there's vested interest. This is STBT with a stop at about 55.11 for targets of around 54.30.
Okay, sell L&T Technology and buy Nestle. Those are some trades. But let's now focus on a CNBC-TV18 exclusive where sources tell us that Nazara Tech is likely to do a fundraise. Rachna joins in with the details. Rachna.
Right, there's yet another fundraise happening at Nazara. As sources have told CNBC-TV18 that this time the company is looking to raise about 800 crores. And this time too, it is looking to raise from its existing capital of investors and shareholders. Now, Nazara has been on an M&A spree. Just this fiscal year, we've seen 3 big acquisitions happen at Nazara. The latest one being Pokerbazi, which was at a deal value of about 900 crore rupees. Though that was a part equity, part cash deal, it is that our sources tell us that with this new fundraise, Nazara is looking to use this new fundraise capital to pay for Pokerbazi, a part of it at least. Apart from that, Nazara is looking to foray into the offline entertainment business and publishing business, and that is what they are looking to invest this 800 crore that they're looking to raise right now to get into. Now, talking about the offline entertainment business, it was just last month that they received an LOI from the creditors of committee of Smash Entertainment, which is a Sachin Tendulkar-backed company. Apart from that, the company is looking to get into the publishing business, and that is exactly what this newly raised capital will be focused towards.
Thank you very much for that. I remember just the last conversation we had after they made that near 1,000 crore acquisition of Pokerbazi, where Nitesh Mittersen told us that this acquisition will be funded partly by the cash that they have, but they will also look at some other fundraise, though they didn't commit to a timeline. But as Rachna pointed out, they are looking at a fresh fundraise and 800 crores via the pref issue. In the last pref issue, the Kamath brothers had put in money in their personal capacity. Mayuresh Joshi, head of equity research at William O'Neill, is with us on the show. Mayuresh, lots of fundraise taking place at Nazara and lots of acquisitions.
Afternoon, Rima. Yes, I think the markets are abuzz with a lot of fundraise news that is probably happening at this juncture. But for Nazara Tech in particular, I think they have been on a string of acquisitions in the past few quarters. And therefore, I think how these activities probably play out is something to be probably seen, specifically in terms of this inorganic growth journey. So I think how the execution probably takes place over the next few quarters is something to be watched out for. The second aspect, obviously, is related to the indirect tax notices that the company had received. So to that extent, what really comes out, positive or negative, is going to have some kind of action on the stock itself. Last but not the least, I think the numbers have been pretty steady so far. Balance sheet is relatively strong. Working capital cycle is relatively strong. And therefore, I think these two triggers, one in terms of the acquisitions that they're probably doing, whether they can lay path to a very strong earnings growth in the next few quarters, and two, the execution in terms of their acquisition and the synergies thereof, and how they probably play on the balance sheet is going to be equally.
Okay, Mayuresh, stay on. We'll come right back and have some more questions for you. Quick break, and we'll be back with the market close.
Welcome back. 7 minutes to go for the markets to close, and now some IT stocks are showing some signs of a recovery. Pull up a First Source. First Source is down 1.5%, but from the day's low, it's recovered close to about 3.5–4%. First Source is the one we're talking about. Even as Sasken Technology has seen a little bit of a lift From the session lows, it's up close to about 1.5%. And in the large cap names, HCL Tech has managed to trim its losses marginally. We've been in conversation with Mayuresh Joshi. Mayuresh, anything that you've picked up in IT which explains this kind of nervousness? And is it just like tactical positioning, sector rotation taking place away from IT and banks? And will it continue this shift away from IT into, say, banks which have underperformed?
I think two things. One, I think the commentary which came through last night from Accenture, I think that created a little bit of jitters in terms of the prospects, specifically for this quarter and the rest of this calendar year, in terms of growth dynamics and vectors being played and laid out. Having said that, if you probably look at a lot of management commentaries, Rima, specifically for mid-cap IT companies, vis-a-vis the large-cap IT companies, the mid-cap IT companies' commentaries have been far more robust. A lot of managements have indicated steady state, constant currency and dollar revenue growth. They're also expecting the kind of expenses that have gone up, specifically the outsourcing expenses, to probably normalize in the next few quarters as well. Again, salary hikes will be part and parcel over the next couple of quarters for respective companies. And therefore, I think the EBIT margins will gestate the salary hikes that take place within the system itself. But generally, I think the commentaries are indicating for robust order flows, execution, and therefore margins remaining extremely stable as well. What probably happens in terms of the rate cut cycle, US elections, is also something that is causing a little bit of jitters. As if the US economy, as some aspects of the market are indicating, is not fully equipped to probably cater to demand, and whether demand is genuinely slowing down in key sectors like BFSI, retail, manufacturing, that might have toll in terms of future order flows. So I think a combination of these factors probably playing out. But our take still remains the same. Mid-cap IT might continue outperforming in terms of numbers compared to large-cap IT. We continue holding stocks like a Persistent and Coforge in our global.
Okay, by the way, some fertilizer names are seeing some action. We highlighted RCF, NFL. About 10 minutes back, they were showing some incipient signs, some early signs of a recovery, but now it's getting full-blown. RCF is up 3.5%. Even on Nagarjuna Fertilizer, it's a 2.5% gain over there. A couple of these PSU banks like IOB have come in for some amount of buying interest. Getting back to the agri side, Himmat Singha C2 is now seeing some interest.
Yeah, that's fertilizers, and I also was checking some other commodities as well. Oil prices, by the way, intraday have slumped quite a bit. I mean, nervousness in a lot of asset classes, including the oil markets. So you're seeing Brent down a little over 1.5% right now. It's again fallen below 73. And that's, NYMEX is down almost 2%. So again, all asset classes nervous ahead of this big announcement. It's showing up in stocks like Oil India, where there was actually good news with the windfall tax being lowered to zero. But I think the market seems to be reacting a lot more to the immediate sentiment around oil prices as well. So pull up stocks like Oil India or ONGC, fair amount of pressure there on some of those names as well. Mayuresh is still with us. Mayuresh, any thoughts on the upstream oil names?
So, Surbi, I think a large part of their variable does depend in terms of how oil pricing is. And therefore, I think if oil prices are on a downward spiral, even if volumes compensate for that, a large element of pricing being not in their favor does not probably get reflected in numbers if oil prices are expected to stay this way. The second aspect, obviously, is in terms of a lot of the exploration needs that will now get fulfilled. Because if you probably look at the oil minister's statements, they're expecting a huge amount of capex, both from the ministry end as well as from the PSU enterprises, to probably have a lot of these exploratory wells being starting to begin, both for oil and gas, and therefore taking the entire acreage area from 10% to 16% over the next few years will entail a huge amount of capex. So I think that will also have some element of impact as far as cash flows are concerned. So to that extent, I think things might remain a little bit volatile. Even the Singapore GRM prices, should be, as an example, have gone down. I mean, fallen off the cliff. And therefore, I think how OMCs will also report numbers, specifically when it comes to the refining part of the business, is to be seen. The only positive statements that come from the balance sheet for most of these upstream companies is the dividend yield that they probably present. But again, I think on a case-to-case basis, our take is that we remain neutral on this sector, at least at this stage.
Okay, just winding down to the markets closing, and we're going to close with cuts. So down about 66 points on the Nifty. The Sensex is down close to about 192 points. The Nifty is ending at 25,350. So ending in the red ahead of the big Fed decision. The cuts are not much, but the second half of the trading session turned out to be volatile. In the morning, in the beginning, the markets in fact went on to hit new lifetime highs. On the way down, it was all about IT and the weakness there. Accenture has changed its promotion cycle and moved it forward by 6 months. That spooked the sentiment in Nifty IT, and plus some profit booking considering the 30% return in the last 3.5 months. So IT under pressure, including all frontline IT names. Other than that, you had banks, which did very well. So banks fought for the bulls. The Nifty banking index ending with a gain of near 1%. Shriram Finance was the top gainer, followed by Bajaj Finance, FinServ. Large banks like ICICI Bank and HDFC Bank also clocked in a gain of about 1.5%. PSU Banks not left behind with a 1% up move. So money moved out of IT today and into the banking names, but mid-caps on the whole were a bit subdued today and underperformed the front line.
Yeah, absolutely. And some examples would be a Blue Dart down 8%, JM Financial 5%, Zaggle 4.5% lower. You had names like, of course, mid-cap IT, Memphis, Oracle Financial, L&T Tech, Persistent. A lot of these names were under pressure today. Biocon lost some ground as well. So these are some of the names on the lower side. But having said that, I mean, you had some stocks popping out on the top side of the screen as well. Look at a Torrent Power, 8.5% up. Look at, Bikaji, which is up about 6%. And some of these stocks from the chemical space, for instance, alkyl amines, continue to have a good session. Moti Sons Jewelers, one of the smaller jewelers, about 8% higher. So in different shades, but yes, all things put together, negative advance decline ratio and an underperformance on the mid caps today.
Graphite, HEG were the other two big movers. I think one of the companies has raised prices of graphite electric, so that's pushed up these stocks. And BSE, what a big move it's had today. 15.5% higher on BSE, and Reliance Infra was up 20%, locked in an upper circuit. There goes the bell, and it's a close just shy of the 25,350 mark, down 73 points. But it's going to be an action-packed night. At 11:30 p.m., the much anticipated the Fed decision will be out. Will we see the first rate cut after 4 years? And what will be the magnitude of it? 25 basis points or 50 basis points? Interesting night coming up. But we're going to wrap up on Closing Bell from the entire team. Thank you for watching. Don't go anywhere. Markets Forward comes up next.